Hussbus bus stop.
JP Hussey here, owner of the Hussey Team Mortgage Advisors, with this week's
Hussbus bus stop.
Coming to you all the way from Duck, North Carolina. All right, we're going to jump right into this because I have a list of things right here. Common mistakes or maybe some hints, some things to do when buying a home. It's chaos, a lot of different things. So I'm going to give you a couple tools to put in your toolbox. So when you're buying a home, you kind of know the questions to ask, things to do. These are proven methods. There's things you look on the internet and you're like, this is how it should be, and it's not, and whatever. So I have a list here, and we're going to go through them, talk about them quick. Here we go. All right, number one, simply choosing, right, the lowest rate, right, without knowing with what comes with those rates, okay? 15-year mortgages, which means your payment's going to be squeezed in and higher. Yeah, you pay it off in the long term, but for the short term, might not be good. That's why there's 30-year mortgages, right? 15 years usually come with lower rates, okay? The other thing is, too, you can have any rate you want on the rate sheet, right? You have them all, but the lower the rate, the more fees, right? You might want 5%, but that costs $40,000 worth of points. Probably don't want that when you look at some simple break-evens. So it's not always about the lowest rate. It's what comes with the rate. So you know what you do? You ask your loan officer for every single rate on the rate sheet and to show you what comes with it. And then you can decide or ask for some guidance on break-evens. Next, not matching the loan type to your long-term plans. Exactly what I'm saying with the 15 and the 30, all right? 15 seems sexy, right? But when you see that payment, it's going to be almost double than what a 30-year mortgage is. 30-year mortgages were made to make things affordable. My opinion, always go with the 30-year. Rates aren't much difference between 30 and 15. Yeah, 15 is usually lower. But you go 30, you can always pay more towards the principal each month on your own to make it a 15-year, a 20-year, a 22-year. Paying extra. That's all a 15-year mortgage is. It's just paying more towards the principal. And you could do that with a 30-year. Next, not getting pre-approved early enough. Guys, you gotta, if you have any inkling that you're going to buy a house in the future, go get it ironed out now. Not when you find the house. It's ass backwards, people. You got to get your financing in line. You might have a home you got to sell. It could be really chaotic. You need a plan in place before you look at homes. So get it ironed out. Get pre-approved early enough. All right? Don't be that guy that finds a house and goes, yeah, blah, 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 and then it's a nightmare, and then you blame us, blah, 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 because you weren't prepared. Just calling it how it is. All right. Underestimating closing costs and escrows. Hey, we're in Pennsylvania. It's one of the more expensive states for closing costs. And remember, down payment and closing costs are two different things, right? A lot of people say, I just want to use this amount of money for down payment. I have to ask every time, does that include the closing costs? I don't know. Okay. Down payment, remember, is just how much you're it's called a down payment. The home that you're buying is $100,000 and you put a $20,000 down payment, the loan amount is now $80,000, all right? But you have other closing costs you got to pay. Title insurance, transfer tax, money to put into escrow to pay taxes and insurance, prorations, recording fees, blah, points, blah. There's a lot there. So make sure you simplify it, all right? And always come up with that all-in number you want to spend for down payment and closing costs, because you can cut it up a billion different ways. That's what I would do, all right? Talking about that for years, guys. Overextending, all right? Extended on your pre-approval. A lot of times people are pre-approved for a lot more than what they actually want to spend. It's two different things. Pre-approval number is just a shot in the air, to be honest with you. It's all about the house, all right? This is why if you've ever gotten a pre-approval game plan from us, we ask about your budget, and we give you a recommendation on the areas you're looking to buy in, what property taxes might be, where you should be looking in the price range to try and hit your personal budget, all right? Pre-approval number is different from your budget, and they're going to be different. You're the one making the payment, not us. So tell your loan officer what you want in terms of your payment and money out of pocket and let them puzzle it up. It's really not hard. Ignoring the power of points. Sometimes it's good to buy down your rate, just not a crazy amount, right? But depending on how long you think your educated guess of how long you're gonna live in that house, you can do break even numbers, right? Especially with everything going on with rates nowadays, you don't know where things are gonna be. People always said, I mean, this a couple years ago, they're really kind of proven wrong. Oh, buy now, refinance later. A lot of times, we haven't been able to refi yet, right? So sometimes buying points, one-time fee, tax deductible, all right, can help lower your rate to a spot that you want to be on your monthly payment. All right, a lot going on here. Trying to give you some simple things to make you dangerous. What do we got next? Not asking the right questions. Tell your loan officer everything. They want to make money, and the only way they make money is by getting you closed. So tell them anything that could occur so that they can prepare. Okay? Just ask the right questions. Tell your loan officer everything. All right? And then they'll figure it out with you and prepare. Underestimating the power of credit score. It's big time. Conventional loans, especially, right? They go in buckets. Between 720 and 739, there's that 10-point bucket. You start getting lower rates, the lower you go in those buckets. It's important, man. Usually you want to have over 740. That used to be the typical guidance. Higher the better. And remember, lender credit scores are different from consumer credit scores. Credit Karma, all that jazz, the score is kind of worthless because no one's lending on a consumer score. So that's a made-up thing. Lender credit scores, all right, are usually lower than consumer because all those companies trying to make money off you, right? They're showing you a higher score to make you feel good. Pretty simple, all right? Next. So it's important to get that credit in line. Neglecting to shop around or shopping around too much, okay? It's an art form. Yes, some people may have some lower terms and rates. It's never crazy different, right? But saving $5 in your monthly payment, going with someone that BS's you and doesn't look at your budget, I mean, just getting a lower rate, you may want to take a little bit of a different rate to have advice from someone that's going to help you out, all right? So shop around, but don't go crazy where it paralyzes you and you can't make a decision. I've seen that happen a billion times. That's why we're a broker. Excuse me. You come to us, we shop a bunch of them for you. We do it for you, all right? I guess we are fiduciaries, but we're doing the right thing by you. We want to get you the best stuff. We make the same amount of money no matter what. It's not like we're making more by taking you somewhere. We're a brokerage for options, so we can do it for you. Boom, last one. Being unprepared for the emotional side of things. Buying a home is sometimes the most expensive thing that people do in their lives, all right? There's going to be emotions. I tell a lot of my clients, if you've been with me, you've heard me tell you, I'm more of a therapist than I'm a mortgage person half the time, all right? Treat this, yes, there's family involved, there is emotions, but treat most of it just as business. Get it done like you're buying anything else. And when you have just a balance of emotions, it's going to be enjoyable and you're going to make the right decisions, right? When you're emotional, some bad decisions might occur, all right? Keep your emotions in check. Have a loan officer that acts like a therapist as well. Hope you have a great day. Peace.
Hussbus bus stop.